Darin Newsom from DTN is our market analyst this week. The USDA is scheduled to release its June crop report Wednesday morning at 11, while estimates on quarterly grain stocks and acreage will come at the end of the month. The latest crop progress report shows U.S. farmers have planted 95% of their corn and 71% of their soybeans. The agency made no changes to corn's condition ratings. The first evaluations of soybeans will come Monday. We talked with Darin Wednesday afternoon and started by discussing the current condition of corn and soybeans across the country.
So far, at least according to NASA's weekly reports, the crop conditions still favorable. In other words, everything looks to be in pretty good condition right now, corn in particular. We didn't see any changes in Monday's numbers. Now, as we get into next Monday's numbers, the next weekly report, we may actually see a little bit of a decrease given the rains, given some of the storms that have moved across the Midwest. Would not surprise me to see, a little bit of deterioration in the crop. Nothing major, nothing really to get the market's attention, but could see some lower numbers.
How'd the market react, both corn and soybeans, to the RFS announcement last Friday?
Initially, we saw a little bit of pressure in the corn market. But as we've worked our way through this week, we're getting close to seeing some technical bullish signals. In other words, signs that this market may finally be getting ready to change direction. And so to me, what that says is that we've put aside a lot of these issues that really were headlines only, and there wasn't any meat to them. I mean, we've got a lot of arguing to go about with this RFS before anything actually happens. And so the market seems to be looking ahead now, and we'll see if it can build on some of these signals that are starting to show up here this week, or they could quickly fall apart and just evaporate.
What could be causing that short term, giving a little bit of a bullish run here?
Biggest thing that we've got going right now is that the U.S. dollar index has come under pressure, and when that happens, a lot of the investment traders, non-commercial traders who are in the market, who have actually built short positions, net short positions in these grain markets, are starting to buy some of those back. Just again on the fact that the U.S. dollar index is coming down. The U.S. dollar index is coming down on the hopes that Greece and the rest of Europe make some sort of deal. Anytime a market is betting on that as their sole crutch for doing something, I think it's pretty weak. So yes, we've seen the dollar come under pressure, but this could turn around and scream higher again on at the drop of a hat.
Last time we talked a few months ago, going out into summer and into fall, you were very bullish, especially in soybeans. Has anything changed since then? No,
still bullish, probably leaning more towards the corn market because of the signals that we saw last fall, but also still in soybeans. And again, this is technically based at, really, because this is looking at the chart that's telling me we should still see some long-term uptrends develop. Now, I think we are reaching a key point here early in the summer where markets are going to have to start to react. We've pushed them about as far as we can go. They're testing the October lows that we built all of this off of. If those don't hold, then we could start to see some changes, some long-term outlook changes.
What about for farmers that are holding some old crop corn yet? Do you have any advice for them?
I know there's a couple of articles up on DTN this week, one by Katie Meisick, and it talks about that very scenario. And I think we're going to see some movement. Usually farmers have to move here ahead of harvest to clean out some space for the next crop. So I think we're going to see some of that. That's probably going to weaken basis a little bit here over the next couple of months. By and large, I still think we're going to see some holding back. As I look at the market, and I'm still long-term bullish, I would probably still hold back a little bit, see if this market doesn't improve, but I also understand the logistics. If we have to move it to make room, then we simply have to move it to make room.
That 2015 crop, is there anything that looks attractive right now, or are you remaining patient there as you look out to new crop sales?
Right now I'm going to have to remain patient. What we have on the books is what we're going to have to, what we're going to have to be happy with for now, or comfortable with for now. If these long-term signals that I've been looking at and holding on to now for quite some time start to fall apart, then we're going to have to change our strategy. And I don't like to chase things down here, but if we break through, that could start a large wave of selling.
Let's talk quickly about corn and soybean exports. You had mentioned the dollar index before. How has that and how could that continue to impact those exports?
Soybean exports remain strong, and it looks like we're still on pace to we're still on track to well outpace USDA's projection of 1.8 billion bushels. Corn is on pace to meet USDA's 1.825 billion bushels. I still think we need to do a little work there. If the dollar comes down, I think it's going to make it more likely that we're able to hit that projection in corn, possibly giving us a little bit of support here late in the marketing year.
Monthly crop report is next week. What number, knife to your throat, would you look at?
If I had to look at it, I'm not anticipating any huge changes because everyone's going to be focusing again on the new crop. What I'm probably going to be looking at is going back to the old crop, and it might be soybean exports, because I still don't know that we're accounting for all of the business that we're done or that we might do here to finish off the marketing year. And if we actually do see an increase in soybean exports, old crop soybean ending stocks could get whittled back a little more.